Hey, what's up, everybody? Hopefully everybody's doing good. Hopefully everybody had a great weekend and a great week also last week for all the bullish plays, right? So, what are we going to talk about today? Well, let's mention a few things here and let's go through a few charts here and kind of explain why, right? So a lot of you guys had the question as to, why did we run? Why did we pump when all the data was bad or we have a negative GDP recession signal, right? Well, you guys got to remember that we've been trending down since the beginning of the year, and we basically priced in a lot of the fear, a lot of the selling pressure, a lot of the major catalysts are were already being priced in since the beginning. So everybody knew and was expecting all this negative data. So because everybody knew and expected that negativity, um, it was a perfect time to squeeze out all the shorts. On top of that, you got to remember that it's a psychological thing. Just because something is negative doesn't mean it has to react negative. Just because something is positive doesn't have to react positive. This is the market, guys. And this market is made up of two things, people buying and people selling. And a lot of it has to do with some psychological issues that we have as traders. So remember, don't ever place yourself on a bias and say we're in a recession, we have inflation, numbers are bad, people are companies are laying off employees and things like that in order for you to grab a put position. If this thing is going green and you're in a put position because you're saying that we have inflation and recession and the GDP is signaled negative, then you're in the wrong because now you're not trading the charts. Now you're trading what the media is saying, and now you're just trading what the people are saying or the numbers that came out, and you're no longer trading the chart in itself. So remember that. Put yourself in check again. Remind yourself that there's some structure and discipline when it comes to these charts. If you're trading a bull flag, right? Just for an example, if there's a bull flag, and let's just say a negative catalyst comes out for the specific stock, whatever XYZ stock is, it's super negative, and you're like, oh, that's a bull flag. It's going to fail to break because of the negative catalyst. And this thing breaks right here. And you're still saying that it's going to go down and it's going to be invalid. And the ticker goes like this. And it just keeps going up, but you're still stuck in your position because you're saying that the catalyst is so negative. This literally tells you that you're being biased to the news versus trading that bull flag in itself. A clear bull flag breakout, regardless of the good news or bad news or negative numbers or data that was provided, it's still not going to give us an entry point because the bull flag is a bull flag, and if it breaks out to the upside, bad or good, whatever scenario was happening, it's still going to go up. So therefore, you specifically as a day trader, as a trader in this business, you are trading the bull flag in itself and not the catalyst. Okay, that's where a lot of people fail and failed this week alone, same as last week. Now, I don't blame any of you for being a little biased this week, okay? I'm not saying that you're wrong, but always remind yourself that you're here to trade the charts and you're not here to trade the bad data. If you're trading the bad data, then you're in the wrong, okay? Because first and foremost, we follow direction, we follow movements, and we follow the break of levels, all right? So no matter what happened, no matter what you thought you were going to expect, no matter what the world is saying out there, no matter what kind of technical analysis charts are being posted, if you're sticking to that bias of recession and inflation, then you're in the wrong. Okay, just letting you know now. Follow the chart first, and then use that data that you have as an extra tool. If that tool doesn't help you, then you are still following the chart in itself, right? We talked about this last week. And last week we did experience this break of a downtrend, right? So here's your resistance, 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 and then resistance. This was the squeeze that we talked about last time. This was your little weekly chart squeeze here, and we said those previous weeks, if we start breaking above this specific level right here, we're gonna go bullish. We're gonna break that trend and we're gonna go up. Now, I'm not taking away anything from the fact that we are downtrending in general. Now, I can draw this trend line and do something like this and say, hey, guys, well, we still have room to reach this level here, right? So technically on these days, does it mean that we're bearish? By no means. All it means is that this trend in itself is pushing up and the trend line is acting like a magnet at this point, right? But we're not drawing that trend line, but I'm pretty sure that you're going to see that trend line everywhere once we get there. And and somebody's going to say, hey, grab puts here. All right, which again, I don't blame you. Now let's go look at the 4-hour time frame. All right, why did we trend up? And why were we trending up? That's the biggest thing. Most people don't understand what happened. Now check this out. Here's your resistance. Okay, this was supply. This was supply again. This was supply again. And then we finally broke that previous week that we talked about. Not this previous week, but the week before that, we finally broke it and we trended up. That's when the bulls started coming in, and that's when everything started becoming bullish. This week alone, right here, we had that nice pullback on what was this, Monday? Tuesday, Wednesday, Thursday, Tuesday. So on Monday, we kind of just trended down, and then we trended down, but this was only for the retest. So that retest, even with all that data that we had a lot of volatility, guys. Now, I don't blame you for not holding your positions on the call side. And I don't think you were wrong on grabbing some puts if you were trying to catch the tops, okay? Because number one, we did have a lot of volatility. We had Feds, we had some consumer numbers, we had the GDP numbers, and we had some big name earnings. So I don't blame you guys for grabbing puts on the top. But what you got to understand is when the chart flips, that's when you got to see what's truly happening. In this case, what did we have? We had a break above all that supply. We went up and we came down and retested. Once we retested, guys, you guys should know that if you guys been following these YouTube channels and you guys know what the supply and demand is, once you break above a zone, all right, what do you get? You get a run up, you get a retest, and then you get that public participation phase, which right here, it's clear what you see. It's a staircase pattern, meaning that, okay, let's go bullish. Let's hold these calls. Now, I am here to tell you guys that I also did not hold my long positions as much as I should have, because of the question and the fact that we do have a volatile week, and we did have the earning reports, and on top of that, we had the negative GDP. On top of that, we've been in a bearish market since the beginning of the year. So in order for us to flip bullish right away and accept to hold the contracts a bit longer was probably a lot more tough this week alone than it has ever been since we've been trending. Now, this could be the start of a full reversal in the market, all right? As crazy as that sounds, even with negative GDP and inflation and numbers being bad and oil trending like crazy, it could be a good start for a reversal. And I'm not just saying that right here we're just going to go straight shot to the moon. It's going to take some time. I think it's going to take some building, and we're going to need, a nice little pullback, a little accumulation here, try to go sideways a bit, create a bull flag, create a pennant, some type of excuse to go higher. The thing about it is that a lot of the big name earnings are already done, so which is a big plus. All the financials are basically done, and we still have a few more things with the chips. So the chips are gonna drive some more volume this week, and we're gonna see what kind of direction we go with the chip sector. So once the chip sector is basically done with AMD and NVIDIA, I believe. Oh nope, not NVIDIA. Qualcomm just had theirs. INTC is done. TSM is done. So we're just gonna need AMD basically, and everything else is done, guys. So the rest of the month, I think it's just going to be some clear price action movement. We don't have a lot of crazy data going on, so it's going to be day to day, and it's going to be a lot smoother trading. Okay, so the volatility is going to cool off. All right, so let's go look at the volatility. This thing is cooling off, is below 22 already, and once this thing goes below 20, it's literally going to be full blown reversal in the market again. All right. Because down at these levels, basically what it's saying is that there's no fear in the market, there's no volatility, there's no selling pressure. So every red candle in the market is going to be considered a dip buy opportunity. Now be aware that we are still in this downtrend, okay? So there's nothing taking away from this downtrend. All right, so somebody's going to draw that trend line. Somebody's going to draw this trend line, and they're going to say we're still on the channel down, all right? Not taking anything away from that. But just remember that the accumulation in the market all across the board was pretty amazing. and now we're looking for reversals and potential dip buys in the market, right? So we talked about Disney. We talked about a few other things. We talked about SQ right here at the bottom. We talked about BA here at the bottom. I mean, there's just so many tickers all across the board that accumulated at these bottom levels that held strong. And that is the reason for a lot of these tickers that ran. All right. Some of you guys are still confused as to why we ran and because we had negative numbers. It's okay, guys. Like, it's okay. Accept it. Accept that the levels are breaking above or breaking below, whichever one comes first. Let's go long or let's go short. Please, guys, stay motivated and don't hold on to that bias. All right. So anyways, let's look at forward slash yes. Look at the next level that we may potentially hit. All right. So I'm going to take this off because I don't need it. I don't care for it. I already know that we're still on a downtrend, right? So looking at ES, what do you expect after a staircase pattern? The staircase pattern usually continues and it usually stops at the next top. What is the next top? Technically, we're right here at this 42K. All right. So at that 41.94, I'm going to be a little more cautious. This level here, that 41.55, that's where we're going to kind of slow down. So if we can come up here, Monday, Tuesday, Wednesday, Thursday, Friday, even if we just stay range here all day, what's going to happen is a lot of the stocks that just ran are going to cool off a bit. They're going to have some pullbacks. There's going to be some adjustments. And we're going to know this week alone if we're going to hold up in these levels. Now, if we don't hold this staircase pattern, you guys should use the pre-market levels as a entry points and stop loss points. So for example, if we break right here below the staircase pattern, you should be taking puts all the way down into that next piece. Wow, I'm so lagging right now. That's just so random. All right, so that's what happens. And you take it down to the next piece. And if we break the bottom of that staircase, you take it down to the next piece, so which is your 39.50. That's how you're going to be trading that staircase pattern. Once we break down, and most people are going to probably draw like a little trend line here or some. Once we break that trend, make sure we're below these little bases. So moving forward, all week, these are your targets right here. These are your targets, and then you want to draw that base. So right here, you see all that little accumulation right here? That becomes your base. So this is your target, target, target. And we're in resistance right now. We're in supply. We've never broken above that 42. We've never really broken above that 41 until now. We tried a couple months ago, back in August. Nope. June. This is June. Sorry. June, May, April, May, June, around there. So we're most likely top at 42. I think we'll probably stall right here and just let the market cool off. So market just had a crazy run, guys. All right. So don't expect this thing to just like gap up and, keep on running. If it does, don't go crazy and start thinking, hey, long-term puts or, I'm grabbing the put because we're still in a recession, and I'm gonna grab more puts because we're facing inflation and we're gonna lead into a recession, right? Don't get caught up in those things, guys. You're day traders. If you're on a 5-minute time frame, you're in and out of a trade within like 5, 10, 15 minutes. If you're on the hour time frame, then you're in a trade for like 1 or 2 hours. Okay. If you're a swing trader, then most likely you're in for like a day or two, or literally buying at the end of trading session and selling at open the next day. Literally, that's not even considered a proper swing trader, but it's still a swing overnight and allowing that money to work for you. So there's multiple things that you guys can look for this week. But either way, 41.50 to 42, a lot of people are going to be looking for that 42 by the end of the week. Once we touch that, be a little more cautious on the top side because we haven't really broken above. But if we do break that 42, look for that automatic 43, guys. All right. It sounds crazy, but that's the next resistance. And then a stall right here at that 42.55. All right. So that's how you would play this week. You would look for a stall here and a potential run up into that 42.50 and 43. All right. It's not impossible to get up there because the bulls are a little bit crazy from last week, even with the negative GDP, it's as crazy as it sounds. And a lot of stocks are showing reversal. All right. So Apple, Amazon, Google has potential to create higher highs because from the stock split. So we're above the stock split price. So this is your stock split price. and we're just trending back on up. And a lot of people are going to say this is resistance and it looks like resistance, but you got to remember that once you have a stock split, some of these stocks become new trends. So starting from here, Google became kind of like a new company. So you can't really say that this is resistance. Most likely it'll slice through it like butter if we continue, and it's not going to really stall there. But just look for whole numbers up above 118, 120, 22, 24, 26, 28, 30. Look for those numbers and for Google to create its own basis structure and look at it as a whole new company. Okay, don't look at it as like you've seen it in the past. Even though this 120 number may be a psychological thing, and look for continuation for a lot of these tickers. Microsoft right now is the leading ticker in the market because it's first one to show some full-blown reversal for bullish continuation, so which may lead the market to continue bullish. Okay, we are at a resistance point here on the trend line, but based on the 4-hour, you can see that we were trending down, right? So I'm gonna show you like where all the downtrend was at. Right here, all this major downtrend, and then here's your excessive pop here, and then drop back inside, and then this was all the resistance, and we squeezed right here. This is where we squeezed, and we pulled through and pushed up for earnings and everything. So taking a look at that picture, what you see here is a break of all this right here. That's what we broke above, and Microsoft just ran. So Microsoft is the leading, one of the leading tickers in the markets, along with Apple as well. Apple is the one that's again leading, and it hasn't stopped since last month. I mean, hindsight 2020. I wish we could have been in these calls and been holding since these bottoms, but unfortunately we didn't. So it's all good. But yeah, even Tesla is on the roll. This thing finally broke above its base. It broke above this major resistance, this accumulation here, and it ran up, came down, and just ran like crazy. So it's probably going to continue to keep on running. It's going to catch up a lot of attention, attraction, and it's going to lead into these 1K. Somebody's going to look for 1K. Somebody's going to look for 11. Somebody's going to look for 1150. Somebody's even going to look for that 12K, that 1200, and it's just going to keep going. So whatever you guys do, remember, don't go against a moving trade. Stick with it and let the charts run. NQ here is already showing a sign of reversal. Okay. Here's your break above that supply. We kind of bull flagged in here and just ran. So we rallied, pull back, bull flag, and rallied on up with a nice staircase pattern. This one's a little more difficult to capture some levels, but we could be looking for this price point here of 131 or 132. I think the 130, 180, 130, 122, 132 area. That would be the next piece of resistance. I mean, otherwise, you're kind of just looking at a random staircase pattern that could hit these spots right here. So this is how I would do it. Once you break above this piece here, okay, so you're looking at this, you would draw this here, here, and here. Those would be your major targets once we continue trending back on up in the market in general, okay? I think some people might draw a wedge here or some. I don't know. They're going to want to see a bearish pattern, but in general, we're kind of just building a staircase pattern. So just expect more continuation, guys. I mean, that's literally all I can really tell you guys. But if things change, things will change. The Russell ended up showing a amazing strength too. This thing broke a major downtrend as well. Here you go. Here's your break of that major downtrend on that 1850. And it's continuing to that 19. So I think the Russell may get a little more attention. So I want to point out a few tickers here for watch list that you guys can keep in mind. And I'm going to be on a 4-hour right now. And let's check out some charts real quick. All right. So first one is going to be JPM. This one has a nice squeeze. Look at this beautiful accumulation right here. If you guys don't know what accumulation is basically a lot of people building pressure here. So they're buying it up, and once we break above here, you're going to see a nice freaking run up like this, or if we break down, you're going to see a nice breakdown to the downside. So this is how I'm looking at JPM. entry points. Here you can draw a little trend line. You see the little squeeze happening right here. The squeeze and is all right there already. Look at the way that those candles are being built there. It could last another 1, 2, 3 days in here, or it can legit just crack on Monday. But I'm looking for the break of 116. Anything above 116, I am bullish. I am long. I am basically full port in this position, and I am going to be very, very patient. Now, I am still in it. I entered Friday for a nice day trade all the way into that top. Those are over 116. I entered down here at the bottom. And I'm looking for a short squeeze here. I'm looking for a breakout. I'm looking for a staircase pattern, a break of the accumulation, all the above. And I'm looking for this to just stay above 116. 118, 119, 120 is what I'm going to be looking for. As high as 120, 119.50. So basically all the way here. This is what I'm looking for, that high. I'm looking for JPM to just bust. And the reason for that is because every other financial bank has been rallying since earnings. JPM is the only one that hasn't rallied, but even BAC is a nice pattern here. So over 34. And then C, same thing. There you go, over that 53. MS, literally just running on up. It's not even stopping, it's just going. As you can see, rally base rally. Even WFC, which is Wells Fargo, is running. This thing is just trending on up. It's just not not basing out. GS, same thing. Goldman Sachs group. This thing has been rallying since earnings. Like, look at this. All right. So my question is, why is JPM behind, and when is it going to start running and catching up with the rest? It almost reminds me of Meta. The difference between Meta and JPM is that Meta got hit with some negative catalysts based on its revenue. Okay, so for the company in itself, based on revenue, it got hit in a negative way. So that hurts investors long term. Now, this is your demand. So if you're going to be trading calls, 154.50 and 153 is your stop loss. But if you are in calls, look for that 170 target in the next 2 weeks. Okay, that's all. I'm going to keep it as simple with Meta. But just be on the lookout for the break of and the squeeze of JPM to create a staircase pattern. So this is going to be the top play of the week. If you guys catch it, if it breaks out, then it breaks out. Look for that 120. So I'm going to be heavy in this position alone. The next ticker is going to be PayPal. This one does have earnings, but I want to see some good positive catalyst to run it all the way at least to that 100. All right, so I'm going to look for these pieces here, even if it can go to the 120s. But honestly, right now, I'm just going to look for that 100 level here, this 100 and 105. This is the piece that I want to hit. Right there. So if this thing trends down, I think there's a high probability that I may play earnings and I'm going to grab a call all the way to that 100. So hopefully we go back into 100 for PayPal. And it's the same thing for SQ. SQ is a great company as well. And it looks like it's trending nice. So the risk reward for calls is amazing right now. And I'm looking for the highs of 90 right here. Right there. That's the piece that I'm looking for, right? Just random lines. I'm not being too perfect here, just in case you guys are wondering. The next ticker is going to be BA. BA has a nice uptrending pattern. So if this thing can just break above 160 level right here, we're going to look for calls and we're going to look for 164. The break of 164 is going to take it a lot higher and just kind of confirm its uptrend. And over that, we're going to look for 173. Yeah. So 170 and 173. So I'm going to grab the bottom of these candles right here. At 173 and then 170 is like right here. Right there. So that's what I'm looking for. I'm looking for BA, nice continuation pattern for BA. Otherwise, over 160, I don't want to take it. The next one that people are going to be talking about is Netflix. Netflix is at a great spot as well. After this huge downtrend right here, we're kind of at this resistance level again around the 230 level. It tried to run on Friday. I actually scalped it right at the open, which was kind of nice here, but there was no follow through, which is cool. All right. The fact that we're fighting these levels and we have a huge way to the top, it's going to capture a lot of attention from retail crew, and they're going to want to do these gap fill plays, and they're going to want to trade it to the upside. So either way, Netflix is still a great company, no matter how you see it, even though it's just a TV subscription. If this thing breaks 228, 230, look for continuation, and it's just going to go higher. What I would be looking for here is whole psychological numbers. So, for example, if you got in at 230, look for 235, 240, 245, 250, all the way up to that 260 level, okay? So just look for some good continuation on Netflix if we can get some, all right? The next one is CRM. CRM is at a great spot too, since Microsoft has been showing a lot of reversal signs. I think CRM over 185 can continue all the way into this 190, all right? So this is going to be the next swing. Over 185, we're going long all the way into that 190. There's nothing really stopping it. There's not a lot of structure stopping it, other than the fact that we do have a slight resistance. And in a bullish market, we can hit that 190. So 185 to 190 is going to be a great play. Some other tickers that are a bit behind are things like HD. HD looks like it can have a potential reversal here, and this may be the actual week. So if this breaks here over that 301 area, I am going to go long all the way into that 310. I think it's a great run that it could have, and it could lead for a full potential reversal play. Low, same thing. After this downtrend, it looks like it could again potentially break above. So I want to take it over the pre-market, whatever the pre-market is. That's what I want to do, as long as we're over 190, 160. Over these candle bodies here, I want to be able to take it long, at least all the way to that 196 and 198. So right here. This is my target for the week. So if we can just do something like this, that's kind of what I'm looking for, HD and low. The other ticker is going to be MU, since AMD has earnings. I think MU is just kind of consolidating here, and it looks like a little tight pattern here. All right, so it's going to probably build here for the next two trading sessions, and it could potentially hit the 66 again, because there's really nothing stopping it. So what it did is it had this nice accumulation here. It ran up, came down and tested, and now it's trending up with a nice squeeze here with AMD earnings coming up. So the sentiment is going to come from that AMD. Most likely some of these tickers may run or may drop according to AMD. Whatever happens, happens. But I am kind of leaning bullish on MU. So over that 62.50, 62.60 area, look for all the way profit taking around that 66. So the retest of all this, right? So you accumulate down here, you push up, you drop down for the retest, and then you build that staircase pattern to retest that 66 level. So giving you guys a bullish plays, use these levels the same as reversal plays, and look for rejections as well on the market. All right. So remember, guys, please, whatever you guys do, don't miss JPM. I think JPM is going to have one of the biggest runs, and it's going to catch up to all the financials. I mean, honestly, if you guys can grab some contracts and we break Monday, let's just say Monday we have a nice bullish engulfing candle. I think the August 19th positions would be pretty nice. The 116, try to grab in the money and check out the open interest, see if there's like huge numbers or random huge numbers that are, you know, around here. So like, for instance, this 120, they're 0.88 cents, 0.95, less than $100. So if you can have like 10 of those, that's like $1,000 position. For open interest 7K, which is those people that are holding these positions. And 120 is not far off as long as we can continue. Those contracts can probably move 100% or more, depending on what the IV and volatility will do in that case. So right now we're only at like 27%, which is not bad. It's pretty good for a financial, and it can definitely squeeze out everything and probably hit this like 124 level on, to be honest. So yeah, about right there. So you guys see all that resistance right there. But yeah, don't miss out. But yeah, guys, just know that the market is on a reversal. Okay, until that changes, continue to buy the dips, continue to buy some of the bullish breakouts, and accept the fact that the stocks are running. Okay, now again, all that can change. As long as we're building the staircase pattern, we're good. Once we break down, then we're coming down, and then just follow the levels respectfully, guys. All right, don't get too biased, and know that the next month is going to be smooth sailing. There's not a lot of crazy data, which is a good sign. So look for a lot of cool off. Look for slower movement, consolidation, accumulation, and patterns to break out to the upside versus the downside. All right. Also keep track of that VIX just so you can see that there's low in fear and not a lot of volatility in the markets. All this can change, guys, if we get some crazy news and Pelosi's plane gets knocked down by Taiwan. So whatever happens, happens, guys. Other than that, stay green, be patient, don't get biased. Remember, guys, top thing, do not get biased and accept the fact that the chart is trending, breaking above or breaking below. That's how you got to manage your positions. All right. Stay green. I will see you guys at the end of the week.